$20 billion. One nation. Total control. That fortune dictated the economic destiny of the entire archipelago. Ubiquity defined this power, stretching from the humble morning noodles consumed by the masses to the colossal cement structures that built the capital city. The financial machinery was complex, financed by massive banking operations that provided the necessary liquidity for relentless, aggressive group expansion. The group controlled the movement of capital, financing the sprawling network of automobiles that connected the disparate corners of the vast nation. This immense accumulation of assets created a profound and dangerous illusion of permanence among both Wall Street investors and local tycoons alike. At the pinnacle of this power sat Lim Sao Leong, embodying the untouchable status of the king of capital in a rapidly changing global landscape. This moment of state-backed invincibility was cemented when he stood alongside President Suharto at the inauguration of the Bogasari flour mill. The Bogasari flour mill symbolized an untouchable fortress, suggesting that the group's power was protected by the very fabric of the ruling regime. Despite this immense scale, the underlying structure contained inherent fragility, a hidden vulnerability masked by the facade of absolute control. Wall Street and local tycoons mistakenly believed that the sheer size of the Salim Group meant they were too large to ever truly fail or be challenged. This widespread belief in invincibility was the silent trap, the ultimate illusion that masked the rapidly accelerating risks lurking beneath the surface. The foundation of this empire was built not on solid assets, but on the intricate, fragile web of political relationships and carefully managed public perception. The transition from a modest beginning to this colossal scale required a ruthless understanding of political dynamics and calculated social maneuvering. A single bicycle tire repair shop in Kudus, Java. One rainy afternoon in 1952, a young Lim Sao Leong watches as his father's hands mend a tire with precision. The Indonesian government announces a new import license system in 1954. Lim Sao Leong's father secures one of the first licenses for bicycle tires. The license becomes a gateway to a world of untapped opportunities. By 1958, Lim Sao Leong's company controls the monopoly on bicycle tires. By the way, if you like this discussion, don't forget to subscribe. There are many more interesting topics coming up. Light bulb. The government's favor is not free. It comes with an unspoken agreement. The Sukong contract. Loyalty in exchange for monopoly rights. The monopoly extends to flour, cement, and banking licenses, key industries for a nation's growth. Lim Sao Leong's empire begins to build its financial engine through cross-shareholdings. The acquisition of Bank Central Asia (BCA) becomes the private piggy bank for expansion. Cross-shareholdings create a web of ownership that looks unbreakable, until it isn't. Dollar-denominated debt piles atop rupiah assets, creating a hidden time bomb. The fortress of Salim Group is built on sand, waiting for the tide to turn. In the 1990s, the Salim Group's aggressive globalization strategy took a significant turn with the acquisition of London's iconic Battersea power plant, a symbol of their ambition to expand beyond Indonesia's borders. The acquisition of Bank Indo-Suez's stake in the Rothschild family's bank marked a significant milestone in the group's expansion, but it also highlighted their lack of understanding of the global market's dynamics. The Salim Group's refusal to hedge their $5 billion foreign currency exposure, despite the warnings from their advisors, was a fatal blind spot that would ultimately lead to their downfall. The decision to hand over the operational reins to the second generation, Anthony Salim, was a succession gamble that would prove to be a critical mistake. As the macro winds shifted violently and the group's empire began to crumble. The family was forced to confront the harsh reality of their mistakes and the devastating consequences of their actions, which would ultimately lead to the dismantling of their global dream. July 2, 1997 marked a catastrophic turning point for the region. Thailand floated its currency. The baht, the first domino in a global financial collapse, had officially fallen. Despite the shockwaves, Jakarta remained defiant. Officials insisted their currency band would hold firm. The illusion of stability was about to shatter completely. Confidence evaporated instantly. The rupiah dropped by 30% in mere days. A vicious feedback loop had been triggered by the massive sell-off. For the Salim Group, this was a nightmare scenario. Their dollar-denominated debt service costs tripled overnight. Paper wealth turned into a crushing financial burden. To meet urgent margin calls, assets were sold at fire sale prices. Local prices crashed as desperate sellers flooded the market everywhere. The empire began to bleed. Trust in the financial system vanished completely. Major banks began to collapse under the weight of bad loans and withdrawals. Panic spread through the capital rapidly. Credit lines dried up instantly. Liquidity evaporated from the economy like water in a desert. No one could borrow money anymore. The system was paralyzed. An ultimatum arrived from the International Monetary Fund. The letter of intent demanded structural reforms to stabilize the currency. It was the beginning of the end. One specific condition broke the Salim Group's back. The IMF demanded the closure of 16 insolvent banks. It was a ruthless act of economic cleansing. In the shadow of a towering skyscraper in Jakarta, a man named Anthony Salim stares out at the city he once ruled. His hands tremble slightly as he clutches a crumpled photograph. His father, Lim Sio Leong, standing beside President Suharto at the grand opening of Bagasari Flour Mill, the empire that once stretched from noodles to cement, from banks to London landmarks, now feels like a distant dream. What if the greatest lesson isn't just about losing wealth, but about understanding why it vanished so suddenly? The Salim Group's fall wasn't just about bad luck. It was about a fatal misunderstanding. For decades, the group thrived on what Anthony's father called political alpha. Every license, every monopoly, every bank account seemed untouchable because of proximity to power. But power isn't permanent. What happens when the regime changes? Lim Sio Leong built an empire by mastering the art of crony capitalism. He didn't just take licenses, he embedded himself into the fabric of the state. Every flour mill, every bank, every cement plant was a lifeline, but also a liability. The moment Suharto's grip weakened, so did the Salims. What if the real risk wasn't economic, but political? The Salim Group's downfall wasn't just about losing control. It was about losing confidence. Foreign investors, once drawn by the promise of Indonesia's growth, began to flee. The rupiah, once stable under Suharto's fixed exchange rate, became a currency of fear. What if the real enemy wasn't the IMF, but the market's loss of faith? The group's foreign currency exposure was a ticking time bomb. $5 billion in dollar-denominated debt sat atop a rupiah-based economy. When the Thai baht collapsed in '97, the dominoes began to fall. The rupiah plummeted, and suddenly, every dollar of debt became a mountain of liabilities. What if the real mistake wasn't taking on debt, but not hedging it? The Salim Group was technically solvent on paper. Assets outweighed liabilities. But solvency doesn't matter when liquidity dries up. Banks froze, credit lines vanished, and suddenly, the group couldn't pay its bills. The empire that once controlled Indonesia's lifeblood couldn't even afford to keep the lights on. What if the real failure wasn't financial, but operational? Anthony Salim watched as the Battersea Power Station, once a symbol of global ambition, was sold off at a fraction of its value. The landmark, bought with borrowed money and pride, became a fire sale to pay margin calls. It wasn't just an asset. It was a dream. What if the greatest risk isn't losing money, but losing your identity? After the collapse, Anthony Salim had to rebuild. Not just the empire, but himself. He deleveraged, professionalized governance, and aligned with minority shareholders. The second act required different DNA than the first. What if the real lesson isn't about wealth, but about resilience? Anthony Salim's story teaches us that political alpha is not real alpha. It's a mirage. Returns dependent on regulatory capture or regime proximity are not sustainable. They are hidden tail risks waiting to strike. What if the real alpha isn't about being connected, but about being prepared? Borrowing in hard currency to invest in soft assets without a natural hedge is not leverage. It's a short volatility trade with unlimited downside. The Salim Group's foreign currency exposure was a gamble that backfired spectacularly. What if the real lesson is that leverage without a hedge is a recipe for disaster? The Salim Group was technically solvent, but it died of illiquidity. Cash flow and credit lines matter more than book value when markets freeze. The group's downfall wasn't about insolvency. It was about being unable to access liquidity when it mattered most. What if the real failure wasn't financial, but operational? Anthony Salim's Phoenix Protocol proved that the second act requires different DNA. He deleveraged, professionalized governance, and aligned with minority shareholders. The new empire was built on resilience, not just wealth. What if the real wealth isn't in the assets, but in the ability to adapt? Imagine stress testing your portfolio against a 50% currency devaluation and a 50% revenue drop simultaneously. If it survives, you are investing. If not, you are speculating on stability. What kind of portfolio can withstand the storm? What is the dark truth behind this event? Share your theory below and watch our next investigation. Hi everyone. Quick reminder. Subscribe for high-quality daily content. Sparkle subscribe now before the next video. We have a special upload tomorrow. High voltage.